Good morning all, hope you're doing well. Tuesday the 16th of August 2022, we are risk on again at the big picture and at the 24-hour change. That has increased every day for the last week, since last Tuesday. So they're really adding to their bearish bets. Now inevitably they're going to be right at some point, so I think they could probably be right tomorrow because we've got FOMC. Note that the VIX is below 20, so that's quite risk on. The SSI is certainly risk on. There's 11 people trying to short indices now versus the one person trying to buy. So it's going to be a crowded trade when we get to like minus 15. The bubbles are working now, but I have to do a manual effort, which is a bit strange, but it's working. I just need to click the button in the app script. So I've just deleted the macro and just redid the macro because we got some new code. So I think that might have been the issue. So the macro is now using the new code and we should be getting updates every 15 minutes. So the bubbles are going to change. So that's that. And you can see the dollar, it's in the strong buy section and the Kiwi is weak. Euro is quite extended. They're quite long on the euro. So that probably should be falling sentimentally. That's that. The yields are a little bit of a risk off because what we want them down, these short dated yields, but we don't want them to go up because if they go up in the near term, then it tells us that there's fear and worry in the near term. And we've got FOMC. So this is the big fish positioning for a bit of a risk off event, I think. This is the opposite of what we want to see. We want to see these come down. And then like the long dated to pretty much stay where they are. We don't really want them to get much higher. If they stay where they are and these come down, that'll be fine. Then we're going to get a steepening. And you'll see we're not getting a steepening, we're getting an inversion. And we don't really want that. So this is risk off. And then set the alarm for the midpoint. It's the yearly pivot for the VIX. So we are well below that now because we're below 20. Okay, so that's risk on from a VIX perspective. AU is a standout. Dollar US 30 is also a standout. It's fairly dark green, and dollar Swiss as well. However, you'll note that this is going a bit rampant, like a lot of the dollar pairs. Yesterday they actually really surged. We've got inflation data coming up from Canada later, so be careful with that on this particular pair. And yeah, you want them to agree. You don't want them to be mismatched. It's not a clear signal if they're mixed. Or gold, for example, red. There's the dollar performance. So dollar yen is it's the laggard, and the Kiwi USD is the the leader. So that's that. So there isn't much to say about that. Obviously, this is subject to frequent change because we've got FOMC tomorrow and the interest rate decision. So it's going to be quite choppy. And so if you want to see the trade of the day, you'll need to sub to the service. You can contact me on Discord, on Telegram. There's my Telegram if you're not already there, or even Twitter. You can contact me there, that's fine. And there's the Discord invite link. Welcome to all backgrounds, all trading experience are welcome. If you're new, if you're experienced, you can join us. And we've got we're going to try and be the best sentiment Discord server in the world. And it sounds like quite a lofty ambition, but I think we've got an excellent team and we've got a lot of knowledge as well. So this is our mission statement, is to be the best Discord sentiment server out there. So join us. You'll see how some of these things, how the market operates as well, and how the traps are formed. Green is buy and red is sell, but you want to see them, confirm the big picture over time. So this is like the big picture, but the dynamic is the shifting of these numbers, and you want them to agree. And that's what I'm going to talk about in a second, why you want the two things to agree. And so this is a potential sell scenario. However, they did sell it, which would then confirm the big picture. So that dynamic shift agreed with the big picture. We were a buy and they've sold it, so it's confirming the buy over time. So there's the two components. What happened? Up. And US 30 is actually making a sell. Now this is a risky sell because at a high level it's a buy. That's the thing that we need to bear in mind. Okay, so even though we might be falling, we're looking to be buying the dips. As long as we hold below the 50% on the percentage long, that's the static. Okay. And likewise, DAX have made a sell because they've gone long, but it's a risky sell. Just like this, it's the same logic because at a high level it's a buy, and we're looking to buy dips because of the percentage long, which is your static. So hopefully that's clear. Right, this isn't agreeing. The two things aren't agreeing, and so you want them to agree ideally, and that's why it's risky sell. Okay, and now this is a good example of a risky buy. Because at a high level it's a sell, but they're selling it. So we're dynamically it's a buy. At the high level it's not. So this is like a mismatch. This is. Okay, so it's not confirming the big picture. And so I think what's going to probably happen, a bit of apprehension and jitters because of the tomorrow's risk event. And also you probably argue that Canadian data, the CPI, is probably going to be quite a mover as well. And that's going to really throw around some of the CAD crosses. So even though it's a risky buy, I would personally wait for this to dip below 50% in order to buy. At least you know that you're not going to be trapped. Below 50%, the traps it could be in. But anyway, there's the sell on gold, which we had the huge heads up about because I posted yesterday. You could have probably caught some of that move, to be honest with you. I was busy liaising with the engineer, so I missed that, which is quite frustrating. That would have been a nice trade. That was a quite aggressive spike, and then we just inevitably start to fall again. So that's that. Stop loss cluster, huge movement. It's one of the largest moves I've seen in 24 hours in years. This is almost like pre-pandemic COVID kind of moves. So it's telling us the big risk event is coming up. Like dollar CAD moved 29% in 24 hours. So that's ludicrous. I posted a dollar CAD chart in the Discord, and you can see how they've shorted it, the retail guys. So be careful. Largest stop loss cluster is AU 6855. The size is smaller than yesterday, and the position is also lower. So just to know that the Quasidb code is valid. It always will be valid, but after the 1st of September, it loses quite a lot of its power, and it's going to go back to 10% discount. Currently, it's a huge discount. You can see how much it is now. So grab it, an annual plan while you can, and you'll lock it in at that price. If you don't, it's going to cost you $31 a month. Grab it now at $10, and you've got a huge savings. That would be fairly normal. Hopefully we're going to get a new import on the API. So this should be reflected in real time. 57% is okay. Below 50% is unusual because it tells us that the crowd are getting paid. Now over 50% they're getting slaughtered. So below 50% is unusual. What's kind of normal is this failure rate to be about 80%. And that tells us that the retail guys are undergoing a typical day and they're undergoing a lot of losses. So 80% would be where I would expect like a normal day to be, but over 50% would be normal. Below is unusual. 70 to 80%. So hopefully we'll get an API import and my macro is going to work. But if not, it's not really a problem. I just have to do it manually, which is a bit strange, but I can sit here all day and just do it manually. It's not really a problem. No signals. Well, I say that we did actually have signals, but because we had API data issues, they came really late. And so we had a slew of signals, but they weren't necessarily valid because they were stuck in a queue. Some of them were quite nice. They would have resulted in a lot of profits, but I think just because the API data is out of skew, a little bit out of bonk, we won't record yesterday's signals, but they were actually on point. So I think just for the fact that the API data was delayed, we were not going to record the signals. And I did put out a couple of messages, so you would have seen them. And for example, the dollar CAD would have been a long. You look at the performance of the dollar CAD yesterday, it absolutely rocketed. And the Kiwi USD as well. And we had the pound. So That would have been quite good, but just for the fact that the API data was old and it was stuck in a queue, we're not going to record it. Yeah, so I think I put the fix in, so I just deleted the macros and just redid the macros, so we should be okay. If not, I can just manually click a button and it just does it. Ideally, I don't sit here all day and click buttons. I want it to be automated. EU, sell, 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 buy, right? And we won't be getting anything in neutral. So you might see the bubbles and you think, oh, why aren't we getting Kiwi USD? Is because technically it's neutral. Okay, so that's important. And we won't be getting AU because technically it's neutral. We could potentially get EU and GU, potentially, and the dollar Swiss as well. So we'll have to wait and see what happens there. And be careful tomorrow as well because of this huge risk event. Yeah. And you've got the inflation rate from Canada. So be careful there. And of course, we've got the inflation rate from the UK as well. So CAD, pound, and dollar are pretty risky to be trading right now. So just be careful. Always trade safely. Use micro lots, and then you won't encounter large losses. And that's probably a good thing to do until you build up your confidence. Right now, I'd probably just be really careful, especially after, as we go into this. We can see the market jitters. In the sentiment shifting. And no doubt the big fish are going to be apprehensive as well, as we saw in the yields. The yields were a little bit out of whack and the yield curve is out of bonk. So we're still not out of the woods yet completely. And I would maybe just eyes on this, to be honest with you, and then trade after. So be careful, and I'll keep you guys updated with anything API related, spreadsheet related. Until I get that sorted, I'm probably going to just be focused on that, I think, and I want to get that done. So there's the links, so click them and you can join us, and I'll speak to you guys soon. Have a great day, and I'll speak to you tomorrow.